Hello. I'm gonna let a few more join real quick. Sorry, I'm just trying to fix my stream. Alright, I'll start now.
Happy Saturday to you. So we're going to do a little bit of a review today. Promise it won't keep you too long. So here's the dollar index, is our weekly chart. There is a fair value gap in here that has been left in place from last week's trading, which is this weekly candle. I want to see if we can keep this level in the form of resistance. In other words, it can go up here, hit it, and how we trade after we go into it is going to be vital for me going forward. Now, if we were to go above it,
So I'll get into like why people watch the dollar in the first place. So let me get on DXY right now. And then I'll bring up Euro. So let me go on the 15-minute. So basically everything's going to be pegged off of the dollar, and how the dollar is moving is going to determine how every other asset is moving. So the most prevalent way, like you'll see, the most relevant way you'll see is through Euro. So if we're coming up during a London session right here, okay, and we're doing the opposite over here. So we're going to sweep sell side, but on dollar, we're going to be sweeping buy side. So let me see. So that's going to create the opposite effect. So we would be bullish right here in this scenario. We're going to be bullish. We're going to be trading the euro. We're going to want to go long, where it's going to be the same exact setup. It's just going to be the opposite over here. So it's going to be inversely correlated. So what I like to look at is, instead of looking at the actual asset we're looking at, look at how clean dollar is. Look how it's reacting to its levels. What liquidity does it have left? Because at the end of the day, like, that's the reason why these assets are moving. So you could see we sold off right here. We kind of consolidated, and then looking at like the higher time frame for dollar, we have quite a bit of sell side targets. So I'm looking at this low as of right now. I was also looking at this volume void right here. Price will attract to these little gaps. And so every time we move lower on dollar, that's putting bullish pressure on every other asset. Because when dollar is failing, some other form of currency or value has to be created somewhere else. So let's say gold, for instance. gold has been just flying up higher. That's because when the dollar is failing, we have to have something to offset that, something to replace that. So you could also see that with like indices right now. Even though we did sell off right here, overall, like we've had a lot of buying pressure, and that comes with all of this selling pressure on dollar. So that's why we're even looking at this in the first place.
Come back down in, I would expect it to act as support and maybe reach up into the rejection block, which is this highest up close price here, and then eventually any imbalance there at all. But on the weekly chart, there is. Okay, so we did have some support off of this fair value gap here. I mentioned when we were dropping, go back and look at the older commentaries, that would reach into here at a volume imbalance and said if we got below that, then this is the area to watch. We traded down into that on Thursday, rallied up into consequent encouragement of this wick right there. So it's a wait and see. So Sunday's trading, Monday's trading. I'll be keeping my cards close to my vest. I'm not certain what we'll see, but could be pretty volatile next week. Euro dollar daily chart. Okay, we have a weekly imbalance here, and you can look at that on your own charts and try not to put too many things in front of you to look at, but also leave you some room to go in and do your own investigation. So we have a weekly fair value gap here. Again, look at your weekly chart and you'll see this same thing here. Easiest way to identify it with study is put a rectangle on the daily chart from this low to this candle's high, and then go to your weekly chart and you'll see right away what that weekly fair value gap is. So the fair value gap is formed now because of this daily close. We've worked off of this fair value gap, and I want to see, does this find its way above the weekly fair value gap and act as support?
So what I'm kind of looking at right here is notice all of this consolidation, and after this consolidation, we have this large manipulation right here below these lows, and then we kind of spring off of that. That kind of tells me this is like a balanced price area, especially because that's creating like a breaker. All this is balanced, so once it comes back into that area, it has no reason to want to even go lower. We're simply going to respect that area, and then we're going to see that market structure shift. And he's considering a inversion fair value gap off of this original weekly candle we're looking at. And just because your draw is like in a certain area, so his draw is these highs and we have a PD array in the way, we're always going to consider, can that become disrespected and become an inversion?
There's been some issues with the crops from an agricultural standpoint for folks that follow the commodity market, the grain markets, because there's a drought right now. Corn, wheat, and soybeans are expected to have a difficult year. So that would be bullish for those grain prices. And if that's the case, that would probably be seen with a dollar index that is consolidating or lower. But we have the added uncertainty of WARU paying attention.
So again, what he's talking about, if a commodity is going higher, then inversely it's also going to affect the dollar and possibly make it either consolidate, as he says, or go lower. And the way I like to think about it is like we have our asset. So if we're bullish on NASDAQ, then we want to see dollar moving lower. And if dollar isn't moving lower, then that's not a high probable condition because you want it inversely correlated, right? So if it's not doing the thing that you're looking for, then maybe you shouldn't be in a trade.
So is a lot of things to weigh out. So what do you do with this information? When I see it like this, I stay to the day trading side of the market, not doing longer term analysis, sticking to intraday trading the sessions only, morning session, afternoon session. Rally back up. This is model 2022. Here's your entry, and then drawing down into an imbalance. That would be your perfect 2022 model. Market trades all the way back down into this low here. If you look real close, you'll see there's the buy side imbalance, sell side inefficiency with an order block. That's why you see this nice little rip higher. There is some unfilled sell side imbalance, buy side inefficiency. So for the bulls, it would need to get back above the weekly fair value gap and find some support and rally. Otherwise, we could see consolidation on the dollar and make a run for euro sell side liquidity here and dig in a little bit deeper on that weekly fair value gap that has just formed.
Beware of day trading options. It's one of the fastest ways to lose all of your money. This is what some people
15-minute time frame. Okay, just a little bit more detail. Nice SIBI after a shift in market structure there, after buy sides taken, imbalance, sell off.
I'd consider that market maker sell model, just because of how we come up. We kind of have like a turtle soup, and then we have that displacement leg below this low, and then we could enter off of this leg right here, and then this is what I would call original consolidation, accumulation. I guess you could call this reaccumulation. So this distribution, second distribution, and then just holding into that news. This kind of leads into what I was going to talk about today. So I'm not sure like what happened here, but I'm sure there was some type of news event. But regardless, if we're gonna trade before news, we want some type of manipulation. So right here, we come up, we take these highs. We're kind of generating all of this, this structure right here. And that's what you want to see if you're trading before news. And you could see that that news pushes it actually into like our levels right here. So it's going to just speed up the process. What you wouldn't want to see happen is like we trade up, we're just kind of hanging out, going lower. And then most likely what that news is going to do, it's just going to come up and manipulate. But if we already manipulated, then there's no need for price to want to come back up there. So that's just something to consider, and I'll show that on the chart.
Optimal trade entry here. And sells off again. Breakaway gap. What is a breakaway gap? Breakaway gap is where you have a SIBI or BISI in an area close to a swing high or low. In this case, it's moving lower. So in this swing high, if this is a optimal trade entry that you would look to try to get into, obviously you would expect it to do what? Drop. So if it drops aggressively, that's a very good signature, something that supports the idea that you're on side and you don't want to see that gap filled. So you would treat it as a breakaway gap. And the run down into the 108.45s or so. E-mini S&P weekly chart. So we had our inefficiency here, and I tell you we have this old high, the entirety of this SIBI, and there is a volume imbalance right there that should be resumed going higher going into the next week or later on. That would be the next draw. Comparatively speaking, as I mentioned also, I won't be talking about NASDAQ tonight, but NASDAQ has in fact reached up into the equivalent of this volume imbalance on ES here, the NASDAQ for that same time period and that respective date. It did it already, trade up into that area for its volume imbalance, but the S&P has only traded up into this SIBI with buy side being taken here. And we traded right back down into the low of this SIBI right there. 1 hour chart on ES, and the chart is shown in regular trading hours. Here's that buy side. We worked all up to the upside for a move just outside of that old SIBI, which is the shaded area here. Then we broke lower, had a volume imbalance in here, traded up just enough to get into the actual gap. This is a liquidity void, a real one where there's no trading at all. And then we had another opening range gap. That's what you're seeing here. These are opening range gaps, opening range gap, opening range gap.
So what he's looking at is from basically the 9:30. It's like the close of futures, which is at 3, and then up till 9:30. And typically, what you'll see is price will come up and want to fill those in. So let me show that. Just go on NASDAQ. So regular trading hours down here on the bottom right. I'd say right now we're extremely bullish, so we don't really see us trade down into it as often. But like right here, Wednesday, from 4 to 9:30, we're gonna fill in that gap, and price is gonna be attracted to that gap. And right now we're just, looks like for the most part we're leaving them open. Right here you could see. But during those hours you're gonna have less overall volume. So price will tend to want to go and fill those back in.
Where we settle at on the New York session when you're watching CNBC and they ring the bell and they clap in their hands, that's the equivalent. And then where we open up the following day at 9:30, that's what's being represented here. That's the opening range gap. So whenever you hear me talking about it, that's the concept I'm employing here in reference to time. So there's an opening gap here. We trade up into it, treat it once more as resistance, and sells off. Opening range gap for Thursday's trading, and then Friday, you can see that we're returning back into that. Now, opening range gaps, I don't like to take them beyond 5 days. So in my opinion, they expire in 5 days. Now, that doesn't mean that you won't find examples of where the market has respected them that were utilized beyond the limitations of the filter I'm saying I use for my analysis. So 5 days after that, 6 days from this day, basically, I'm no longer interested in using that as a return back into it as support or resistance. So I'm not treating it like a new week opening gap. Okay, so new week opening gaps, regular trading.
Why are you not investing in tax liens? No, seriously. Why are you not investing into
hours?
So it looks like he's just going like deeper and deeper into this, but basically the premise is we're probably going to fill in those gaps kind of like we would a fair value gap. And right here we could see you have that premium level of that new day opening range right here. I don't think it's like that relevant as to say like I would use it all the time. The way I like to use it is to see if we're gonna come up and like fill it in, and then potentially see us like trade away from it.
You'll see the separation, trades down to that opening price at 9:30, and then rallies. What is it going to try to do? It's going to reach for the buy side here, and then try to work inside and reprice into what? All of this opening range gap. But we have a lot of order flow here and here. So it's not necessary to do a complete closure. And I mentioned that I was interested in that daily fair value gap on ES. I sent a tweet out, discount fair value gap on ES. We actually traded into it by 1 tick. So here's the 12 p.m. to 1:30 p.m. New York lunch. And I taught recently how to use this information. If you have a bias, you think it's going to be drawing to a specific higher time frame key level. I shared that with you on Twitter Friday morning. I said that I favored the lower fair value gap, and you can see that on the ES chart. That's what we're looking at here. So we ran up throughout lunch to take the buy side, half of the opening range gap between where we settled on the previous day and where we opened at 9:30 on Friday. Measure that with a fib. 50% is here. It trades to it here, consolidates, and one more time runs into it, and then we trade into mean threshold of this bullish order block. So notice how it was used here as support, rallied up. Once we traded below that low,
Yeah, so typically when we have this lack of expansion during New York session and we kind of generate liquidity, and that's kind of what I'm seeing on potentially NASDAQ right here, because we have like this high and this high still left. We did create a SMT, however, it's just something I'm looking at. But sometimes you'll see later in the day we'll have some price development after New York lunch. So that would be like we would run, in this instance, we would run buy side, and then we just generate more sell side, and then eventually we'd see some kind of market structure shift. So that would be through this inversion fair value gap. And then we have our PM session silver bullet into what would be the final target. And so if I wanted to see that today on NASDAQ, yeah, this is looking pretty identical, just on the opposite side. So we would want to kind of see us, let me get this curve out, kind of like trade down and then come up like this and continue respecting preferably this fair value gap. But same kind of thing, same setup right here. Inversion fair value gap right here, supported by this PD array. And then for us to see just that continuation onto these highs right here. Because my bias overall in the week is still bullish. I'm not sure if we'll still run up there because we don't have news, but it's literally like the same setup we're seeing right here, just the opposite. So
one of my PD arrays has an inversion application. Everything acts like you learned about in terms of support and resistance. Which high and low do you use with classic support and resistance? See, I've already deciphered all that. I'm not looking at just the low. See, classic support and resistance, fellas, they'll look at that low, draw a line on that out in time, and price should stop there, but it doesn't. It consolidates and rips through it. So my ability to go into order flow, old market structure, and refer to very specific levels, things I'm looking for that are very finite. They're not ambiguous. That's not a range that you have to guess about. So a lot of these things have required rules to adhere to, and you're learning them as we go through this year. So the market rolls back on anyone that was short in this big gap down. With electronic trading hours, you would see there's a lot of movement from here to here. Buy side here, buy side above some other highs in here that we don't even need to look at. But to eliminate all the guesswork, just get a range on that opening range gap. It's Friday. It's likely to draw down into its daily fair value gap, which I'll show you. So it's only pulled back to give a short-term premium. Then the market breaks lower, and then you get the typical run back down into the opening range gap low here, and then trades into the low target, which is the daily fair value gap. And again, I'll show you what that is. But you also probably noticed that you see some discoloration here. And for those that have been with me for this year.
Why take less when you can get a beefy 5-layer burrito?
I don't think you guys want that.
A double
range. The dashed line is 50% of the opening range gap, and this is 50% of the order block or mean threshold. So that's what you're seeing here. I'm just annotating that. Probably would have did a better job of not wording it that way. So, and looking at it now, I wish I would have said it differently, but we're going to stick with what we got here. So at 10 o'clock in the morning until 11 o'clock in the morning, we're looking for a silver bullet. I mentioned that I favored the lower end, so bias, in my opinion, was bearish. And I know some of you that are highly critical, or just maybe you're brand new, you're looking at this move here to here. Well, how is it bearish when it did this run? Or how's it bearish when it did this run to here? Or from here to here? What was the largest move of the day? It was moving from here down to here.
So price was just moving to this premium level, which would be above that 50% of that opening gap range.
And it went one tick below where I've already told you to look at on Twitter with the daily fair value gap. So bias is what? My bias is bearish. So I wanted to go short. I showed examples of executing, working at the 9:30 opening, and was like 75 or so handles taken out, and you can look at that on Twitter.
All right, I'm just gonna get into the lesson for today because it's kind of repetitive. So I like to, when I'm looking at news, which is gonna be what we're talking about today, I like to keep red and sometimes orange, but preferably just red. USD, because I'm only trading USD pairs. And we're going to be looking at last week, which was, yeah, this is last week. So getting into last week. Okay, that's fine. Okay, so Monday starts right here. Let me mark that out just so we know. Okay, that's Monday. So we were looking for this week to trade up into this high last week. We're gonna use these volume imbalances as our support. So I saw on Friday we had this nice little closure up higher from this open to this close, and then going into Monday, we didn't trade Monday. That's just something to observe. Okay. But then Tuesday right here. So what news did we have Tuesday? So we had 8:30 PPI. So let's see. Let's dig deeper. Okay, so what I'm kind of looking at is right here. We kind of already had our manipulation. So I would say right here, from taking out these lows, and even though we didn't take out the full Asia low range, because we took London and we took part of Asia, about, I'd say 50%. Yeah, so we took about 50%. I would say what I was talking about earlier is we could, if we've already had that manipulation, we don't expect necessarily news to manipulate. It's going to be a continuation off of our bias. So our bias was for us to trade up into this gap right here. So that's what I'm looking at before news develops, is can we find an entry like in here for us to enter before that news into that continuation, because we're going to expect that continuation off of news. If we can't get that, which is perfectly fine, let me head back. Then once that news occurs, so right here it's at 8:30, we could find an entry directly right after that 8:30 news. So it would be right here. You could have that, and then back to targeting this. So what is happening? Well, if we already came out and we took out that sell side, which would be this low, and then yeah, part of these lows, and we have even this, we have our midnight price. Okay, well, if we're trading down below midnight price and all of this stuff, then that's likely going to be our manipulation. So why is news going to come back down lower? It doesn't make sense if our draw is up here. So immediately after that news comes out, we have our safety net, which is this fair value gap. We know that the manipulation is most likely over. So let's just find an entry using order flow. So right here, fair value gap. If you want to use, we have this fair value gap right at 930. I believe I took a bit of a later entry in here, but it was still a really good trade. And then, okay, going into Wednesday. So we had 8:30 news. So something Price likes to do is when we have like these large wicks, even if we have like a certain bias, Price will still target these wicks. So if we're bullish and we have like a large wick come down when we're bullish on the overall bias, we might still come down and take that news liquidity. And then what would happen after that is we'd continue our bias. So right here, we're kind of in a weird position where we kind of have to decide, okay, what are we going to do? Well, we have 2 wicks on both sides. Which one is going to get ran out first? Okay, so we run out the high. So I did end up shorting this day. So after we kind of create like a market structure shift in here, let me go to the 2-minute. I believe this fair value gap was my entry right here. So even though my bias is bullish on the overall week, everything else told me that it was okay to actually go short, because we have this low that we created, this data low. We had dollar going higher, and then we had also some SMTs in here. So as a short-term swing, this is okay to short right here. Okay, so we come up. We also are in premium right here. So that's something I consider when I'm entering off of my fair value gaps. And then we just trade down into that low. It takes some time, but yeah. So let's see how we actually react later in the day. Yeah, so we're just continuing that bullish bias. So maybe you find an entry in here later on in the day. But yeah, we go and run out that high. So again, you could favor these short-term swings. You could follow the daily bias, kind of both sides right here. But again, those news wicks are almost always going to get taken out. So from this high to this low, both sides are getting targeted. And then Thursday. Okay. So it's literally like the same idea right here. So if we've already manipulated, so we took out London low. Let's see from this perspective right here, before news comes out, which is this wick, or sorry, this candle, these next 2 candles. So we took out sell side on London. We took out sell side on Asia. For the most part, we've manipulated like most of this move. Okay. We come up, we create this inversion fair value gap. Okay, so during our 8:30 news, which is right here. Okay, so we've already manipulated. This is okay it's okay to get long right here. I would say I would put my stop loss to break even if I was long right here, because we didn't really have that large of an expansion coming up here, so it is a riskier move. But again, like, you're gonna see this phenomenon over and over once we have that manipulation, that's where we're going to get our continuation news. That's how people trade news right here. You have to know when price has already manipulated. So even though we did trade up higher right there, our overall draw was this high. So we did take a really nice trade live that day. If you guys remember, it was on a 2-minute gap in here. I want to say it was a lot later, but yeah, if it was off of this 2-minute gap right here. But again, we're not overextended if we know the draw, which was all the way up here. Then we're not overextended. So that's about it. Just showing you guys once that manipulation occurs, we can get long. We could anticipate what the news is going to do. So if you guys have any questions. Volume is very low. Okay, yeah, I'm just making sure. Did you guys have any questions regarding this news, how I trade news? It's pretty much just you have, your draw on liquidity, which can be your news, or you have your manipulation and then news continuation. That's pretty much it. It's really like helpful to know that context when you're trading, because I feel like a lot of people, they get caught up, they see this like large move that already occurred and they don't want to enter later on, when a lot of the time that ends up being like a huge continuation day where you could catch a huge trade. I'm gonna look at price real quick. Still respecting that fair value gap. Looks like ES is a lot more bearish on the day. However, we are still like, I can't see us selling off just yet. Got this high. Yeah, you guys should buy some